Hey everyone, I've got a stock here that I trade frequently, and I know if you watch a lot of my videos that I constantly say I don't share my trades, but here we are. I want to walk you through a possible couple different scenarios here on trading Pixelworks PXLW. It's a stock I've been trading for years. So here we are on a 20-day chart, and I know a lot of people say, "Hey, this is hindsight, man. You're pulling up an old chart and saying, oh yeah, I would have gotten in at 246 and out at 323." And I'm not going to bullshit you. I think if you follow me on TikTok, you know that by now. Also, my chair is very cracky. I don't know what's going on with my chair, but if I lean or move, it pops and cracks. So sorry if you hear that in the background. I'm too lazy to edit it out. So I'm going to show you two different scenarios here on how to trade this stock. One that I personally would trade and the other that I maybe probably wouldn't. I'm also going to be on my phone to be showing you the math and all of the, profits and losses and stuff. And again, too lazy to edit all that stuff out. So you're just going to have to bear with looking at my bald head while I'm punching it on my calculator. All right, so first thing we notice is, and let's just pretend for the sake of this video that none of this has happened yet. We're day to day on this chart. You might have heard people talk about the term, don't catch a falling knife. That's when you're trying to time the bottom. When's it going to stop going down? I'm going to buy here, nope, here, nope. It keeps dropping. And this is a way that new traders get wrecked. So the first thing I would say, if you're looking at a stock like this and you see lots of selling, is to wait for the stock to consolidate. That means trading sideways and enter oversold territory on the relative strength index. Like you can see down here, it is severely oversold. This is a indicator, not a guarantee, that the stock is going to go back up. Indicator, not a guarantee. So the first thing I would do is, if I was a new trader or just getting into trading, is I would wait. You don't want to just buy because all the analysis is here, right? It could consolidate, trade sideways, and then dump lower. So one of the things that I would recommend is waiting to get in on some positive movement when the volume is a little bit stronger to the upside, like you can see here. Now, a lot of people will say, yeah, but you missed out. Like, you could have gotten in at 240. Yeah, but you didn't know that. You don't know in the moment that this is where it stopped. Like I said, it could go lower. And it could consolidate somewhere down here in the 230s or $2 range. So wait for the stock to start going back up after being oversold and consolidating. Yes, you'll miss out on a little bit of profit, but it's not much. So let's just say, hypothetically, that we get in at $2.60 right here as the stock is beginning to cross over the 20-day moving average, which is this blue line right here. Anytime you see a stock crossing a moving average on the way up, it's bullish. On the way down, obviously, it's bearish. So we have our first, well, we have our second. Our first indicator was it's oversold and it's consolidating. Our second is that we're crossing over the 20-day moving average. So this is maybe where I would consider buying in at around $2.60 on some strong volume to the upside. So now we're in. Now the next question is, when do we sell? One option is to have a price target in mind. The other option is to have a monetary or percentage goal in mind, right? I want to make 10%. I want to make $200, right? So then you would have to calculate how many shares are you buying. So, like, to keep the math easy, we're buying 1,000 shares at $2.60, so 2,600 bucks, and we want to make $200 on this trade. Then we would say, okay, I bought it at 260, it has to go to 280, and that's where I'll take my profit. The problem with this is that the indicators might be saying that the stock might still be running. So you have to be able to make a snap decision here. Okay, we're in at 260, whereas 280? 280 is right here. And look what's happening when we're at 280. We're getting a breakout, and we're getting a crossover now of the 50-day moving average. So why would you sell? The other thing I noticed is that we're using this 20-day as a kind of support on the positive side of this 20-day moving average. And every time the stock kind of gets a little lower, it just keeps going higher. So why would you sell, right? Even though you know your dollar goal is 200 bucks, but you're seeing that there's very strong volume and this thing is just running. So one option would be to say, all right, if the stock gets below 280, I'm going to sell, I'm going to take my profit, and I'm going to move on. The other is just to say, I'm just going to let the stock ride. If you are a true day or swing trader, I guess, because we're swing trading over the period of several days here, I'm going to assume that you're sitting and glued to your computer. You're not kind of half-assing this and looking and walking away and looking and walking away. As long as you're glued to the screen and you're watching this thing, I say let it ride. The next thing we are going to look for is if it crosses this 200-day moving average. That's another really bullish sign, right? When a lower moving average crosses higher moving average, like the 20-day crosses the 50-day, this is what they call a golden cross. It's pretty bullish. This is a bullish sign here. So we've got that signal that this thing is going to run. And now that it's crossing, the stock is breaking over this 200-day moving average, which can also act as a support or resistance line. Again, why would you sell? We're going to wait for the indicator here of the stock being overbought. When this stock is overbought, that's when we're going to sell. And yeah, so you can see it's overbought down here in the $3 range. And yeah, look at that. It runs up a little higher. It gets up to 318. You can't worry yourself too much about when you exit, right? I'm not going to bullshit you and say, yeah, you got it at 246 and you got it at 323. The goal isn't to make all of the money. It's just to make some of it. So I would enter around 260, right? Let's just do the math here. I don't know if you knew this, but if you right click and you go to add drawing and you hit Trendline, as you move this blue line up, you can see this bar in the box to the left will show you a plus sign, and that's the percentage in the middle. So right now we're on 13.9%. So $3, we're up 15% on our trade. That's pretty good for just a few days. You know, at what point are we getting super greedy here, right? Like, look, up here we're now 22% up, and we're at 318. At a certain point, you're going to want to take that profit, right? $2.60 up to $3.10 is a 50-cent gain. That's $500 in like 1, 2, 3, 4, 5 days or thereabouts. That's pretty good. I would be getting out somewhere around the $3.10 range after we've crossed over this 200-day moving average. But remember, like anywhere that you get out over here is profitable, right? You've made money. So if you get out here, you've made money. I would say at that point, don't chase. If you get in at 260 and out at 280 and it keeps ripping, hey, you made your money. Wait, because you know what's going to happen is it's going to get overbought. It's going to consolidate, and then it might go down, or it might just enter a trading range, right? It might do a couple of different things. So what happens now? We've sold at $3.10. Let's just do the math again because I'm curious. 260 all the way to 310 is a 19% gain, right? So we get, if I drop it here, it'll show you, I got in here, I got out here, I made over 20% on my trade. We can activate drawing and it'll show us again. No, it won't. Why isn't it doing it? Remove drawing. Anyway, we've made over 20%. That's pretty good. Now, the next question is, okay, what do we do? What I would do is say, okay, we're overbought. It's going to pull back. That's my indication. That's my guess, is that it's going to pull back. I'm going to now wait for the stock to sell back off. Where will it go? Well, it could, if it does sell off, it could get all the way back down to its most recent low, which would be 246. And look what ends up happening, actually. So in the meantime, I'm out of this trade. And we're talking about more than 2 weeks here, right? 1, 2, 3, 4, 5, 6, 7. That's 1 week. 1, 2, 3, 4, 5, 6, 7. That's 2 weeks. It's almost 2.5 weeks that we are out of this trade as we are sitting here watching it just go lower and lower and lower. So what am I keeping an eye on now as the trader? What I'm going to do is I'm going to right click and I'm going to go and I'm going to add a trend line and I'm going to drop it right at this low of 246. And I'm going to keep an eye on this. And I'm going to be watching. Now, this is something that I've taught in other videos. If you have a lot of stocks that you're trading and you're waiting for it to get down here, you're not necessarily waiting for it to cross below this low. You're waiting for it to get to this level. So what I would like to do is drag this thing up a little bit, like let's say to $2.55. And then I set an alert, create alert withdrawing, and then when it crosses below 255, my phone is going to buzz. So now as a trader, if I've moved on, if I'm doing other stuff, I'm looking at other stocks, and I've kind of forgotten about this one, and I'm thinking, all right, next time it gets into the 250s, alert me. I'm going to be at the gym, I'm going to be trading other stocks, making TikToks, whatever I'm doing, my phone's going to buzz and it's going to say, alert, your stock has just crossed below 255. Now I can come back and say, all right, I wonder if this stock is going to stop at this trend line. I wonder if it's going to stop at $2.46. So we can draw one from 246 and look where this stock basically gets. And we still have some potential downside here, right? Because we're not yet oversold. So I'm keeping my eye on this 246 range. Now, am I going to buy it here? No. Remember, like I said here, where we want to see this stock start to go in the opposite direction, the reason that we don't buy just when it kind of stops going down and consolidating is because we don't know what's going to happen next. You're trying to catch a falling knife. You're trying to guess. You're trying to go, yeah, it's going to go back up because I want it to. So here's another example of why you don't want to do that. And that's the second part of this video, which is a different way to trade this stock, which is on this very narrow trading range. I personally, as a stock trader, would sit this one out. It's a lot of work for just a little bit of money, unless you're going in with like thousands and thousands of shares. So let's go here and see what happens. All right, it gets overbought and it starts to sell off. But look what happens. It stops at support on this bottom Bollinger Band. And then it goes back up. So here we are at $3, and look where it goes, $3.21. Even if you get it at 305 and you sell it at 315 or 320, you're still making about 150 bucks on this trade over a few days. Then look, it drops again, and then over the next couple days, it starts to move higher. So you could, in theory, buy on this support, sell up here on this resistance, buy on this support, sell up here on this resistance. But remember, you're buying on the way up, which means that your profits aren't going to be as good, right? Hindsight being what it is, yes, if you got it all the way down here at 299 and sold all the way up here at 230, 223, you'd make a lot of money, but that's really probably not going to happen, right? Especially if you're buying it into the strength up here. Your profits are going to be a little smaller, which is why I would probably sit this trade out, all of this, and I would just wait for it to get back down here. And if it didn't get back down there, then there's another option that we'll talk about at the end of the video. But look what happens when it starts to consolidate, right? We can see it gets down here and it starts to consolidate a little bit in this area. And then it dumps, right? That's why I don't want to buy it just because it's consolidating. Just because it's consolidating doesn't mean it's going to go up, right? Here it is consolidating again. Here it is consolidating again. And look what happens. We don't have any strong movement to the upside. So that's why these little trades here, not worth my time. I wouldn't bother with that. Also, because we're trading in a very narrow range, it indicates to me that there is possibly a breakout coming. Now, it could break out to the upside and smash through this resistance and go way higher, at which point, that's our third option, would be to make another momentum trade. You know, like if it broke out right here on very strong volume, then you could make a scalp trade. You could make a very quick day trade or something like that. But in the meantime, I'm waiting to see what happens. And you can see now on the way down, this thing is crossing. This is a death cross, right? When the 20-day crosses the 200-day. I'm going to sit this whole trade out, and I'm going to be keeping my eye all this time on this area right here. Now, another thing to consider is it might not get down here. It might consolidate in the 280s. And do something like this and then break out again. So there's a lot of variables at play here that you as a stock trader have to be aware of. But most importantly, the way I like to trade is based on relative strength index. If the stock is oversold and is starting to move higher, that's usually when I would make a trade. So what am I going to do with this trade? Well, I'm going to wait. It's Friday now. Markets are closed, so it's the weekend. I'm going to wait to see what happens over here on Monday. If we get a period of consolidation, Maybe by Tuesday, this thing starts to move back up. These Bollinger Bands start to narrow, as you're seeing here. When they squeeze together, it's an indicator of a breakout. So maybe something happens later on next week that's positive. I'll enter this position, and I will make a trade into strong volume to the upside. Now, your next question is, well, where will you sell it? Again, same thing as last time. I'll be looking at this, and I'll be waiting for this stock to cross over all the indicators and enter overbought territory. Or if I have a profit that I'm really, really happy with in a quick period of time, even if we're not oversold, I might take half, let the other half ride. You've got options here, which is kind of the point of this video. There's a lot of ways to trade this thing. There's a lot of options that you have. There's a lot of scenarios that play. What if it does this? What if it does that? What if it consolidates and then breaks out? So this is a little bit of a longer video, but I'm going to wrap it up here. Thanks for watching. If you have questions, drop it below. If you thought this video was helpful, subscribe, click the bell, hit the notification, hit all the buttons. Thanks for watching. Have a good day.